Hello everybody, welcome to the market briefing for the weekend of Sunday, July 10th. Let's dig right in here. We'll start with a disclaimer. As always, everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here today are my own personal opinions and not to be considered advice to buy or sell any security. And all trading decisions are your own and done at your own risk. Now that we got that out of the way, let's get into the fun stuff. Okay, so coming up this week, we've got some busy, important stuff later in the week, but it starts off pretty quiet. Nothing really tomorrow in the U.S. There are some international events that we should keep an eye on. There are Japanese elections happening today. And apparently the incumbents, the ruling party, is doing quite strongly. So probably not a big change in markets from that, but we'll have to see. And there's also Kuroda, the Japanese central banker, head of the central bank, is speaking tomorrow morning, on Monday morning. And there's some important numbers coming out of China overnight as well. So that there could be some fireworks from that. On Tuesday, we have another fairly quiet day. Really, the biggest thing is the 10-year bond auction. Traders will be keeping an eye on that, of course, because traders keep an eye on the 10-year bond, and it's the yield is in an area now where we don't like it to be. We'll see in a minute. We'll bring up the chart of that in a minute, actually. Wednesday, we have the big one, Consumer Price Index, also known as inflation. That's the number we've been talking about, well, since the last time that number came out, or the last FOMC meeting. Everybody seems to be waiting for this to take a big drop. And, if this does take a big drop, or it comes in lower than expectations, we will definitely see the market rally. If this comes in hot again, that could be the end of the rally we're currently seeing in the market. And that could take us out to new lows. So really important number on Wednesday. It'll probably cause some volatility. Probably light trading, light volume Monday and Tuesday. With some volatility later in the day on Tuesday as traders position for this number. So that comes out before the open on Wednesday. On Thursday we have the producer price index. Again, this is kind of an inflation number as well. Not as important as the CPI, so it won't be as big a reaction. And also on Thursday we have unemployment claims, as we do every Thursday. On Friday we have retail sales, consumer sentiment, and also consumer inflation expectations. So a fairly busy day on Friday, and a really good look. Between retail sales and consumer sentiment, it gives us a really good look at how the consumer is feeling and acting. Consumer sentiment is when they tell us how they're feeling. Retail sales, they're showing us how they feel about the economy, how they feel about their jobs and whatnot moving forward. So these are really important numbers. So lots of stuff going on this week. Also coming up this week, we have the beginning of earnings season. Now, early in the week, there's really not much that to be paying attention to. Maybe some people might want to pay attention to Pepsi. I think that the first one during the week that we want to look at is Delta Airlines, because I believe this is one of the first airlines to report for a while. So this could be quite interesting, and this will affect the whole airline sector, and possibly even the cruise lines as well, and travel in general. So Delta Airlines, that's important on Wednesday before the open. Then on Thursday before the open, this is where earnings season officially kicks off with the big banks. We've got JP Morgan on Thursday morning. We've got Morgan Stanley on Thursday morning as well. And we also have Taiwan Semiconductor. And we've been paying a lot of attention to semiconductors lately. So this is an important one for us to watch as well. Not much going on after the close on Thursday, but then on Friday morning before the open, we've got some more banks. Wells Fargo, Citigroup, we've got BlackRock down here, US Bank Corp. So A lot of important financial companies, banks, and other financial companies like BlackRock reporting on Friday morning, and that will continue, of course, the week after. All right, so let's dig into the market and see what's going on. We'll take a look at the major indices first, of course. There we go. Looking at the S&P 500, and you can see that after a little bit of a pullback, we did rally again as expected. I talked about how I thought we were going to rally up and had a really good chance of making a higher high above this high, which would lead us to believe that, you know, we were beginning of a potential uptrend, more than just a very short-term uptrend like we're seeing now, right? We've been taking our time getting there, though. I thought we would be either at this gap fill area, or even, you know, the top of the gap by the end of the week, or may have even tested it and rolled over, you know, by the end of the week. But it's been taking some time to get here. We've had some little consolidations and false starts, you know, with this big gap down day on, I believe that was Tuesday. But it, you know, it roared right back, right? So now we're sitting here, you know, at this resistance area. We've got this gap right overhead, the declining 50-day moving average overhead, and this downtrend line overhead. It really seems to be do or die. And then, of course, we've got all this important economic data coming in later in the week. So, you know, this is a real kind of coin flip sort of setup, in my opinion. I think we continue to go higher, but if there's any sort of bad news, I think that there's enough potential for fear in the market that we could roll over. So I really don't want to make a call here. Although I do think that if we can get above this 50-day moving average and then get above this gap, I think it's a no-brainer we go to 410. And I am leaning bullish. And I have a bullish bet on, a bit of a YOLO. The kind of YOLO play, actually, we're going to be going over on Thursday in the options education session. I'll give you more details on that a little later as well. So I am leaning bullish, but there are definitely potential headwinds. Not only economic headwinds, there are technical headwinds up here. So it's a good week to be careful. But one of the things that gives me hope and makes me bullish is that there are lots of good-looking setups, and we'll get into a bunch of these later. So next up, let's take a look at the NASDAQ. We'll look at the QQQ ETF here, and you can see that we have moved into the gap fill. We're right at resistance, right at that 50-day moving average, and then we've got some more resistance overhead with this psychological 300 level. But again, you know, if we can get through this, I think it's a quick move up into, you know, around this 318 resistance. But do we get through? Does something happen, you know, overnight, you know, or into Monday morning that causes us to roll over here? And that's a definite risk right in here. IWM, the Russell Small Caps. You know, these pretty much rallied all week. But we've had trouble, you know, didn't even make it to the 50-day moving average or the top of this gap fill. You can see on Ticker Talk on Thursday, we were talking about how this appears to be putting in a rounding bottom, and I discussed the possibility that this could turn into a nice big cup and handle. And I drew out sort of what that might, now it's, you know, it's early to be thinking about this, but I drew out what that might look like. You know, where it comes up into here, the, you know, the rim of the cup, and pulls back a little bit and then takes off to go and test these former highs. Just something to think about, because with everybody's talking about how we need to see this capitulation bottom, you know, the big V bottom, where we need to see capitulation, everybody freaks out. Maybe that's wrong. Maybe if that's what everybody's expecting, maybe we get this big rounding slow bottom instead. Just something to think about. Microcaps, looking, yeah, I mean they've had a nice week, really good rally in here, but it's been kind of messy, and we're in about the same place as where with a lot of the other indices, where we're coming into the 50-day moving average. We haven't filled the, or this hasn't even filled the first gap. The other indices have filled the first gap, and the other indices are looking at working on that second gap up there. Volatility index. This broke down, is breaking down nicely out of this uptrend line. Remember we were looking at this big pennant, big triangle here, and wondering which way it might break out of that. And it is definitely broken out to the downside out of that. Now, we are coming into the 200-day moving average and also this previous pivot here. If we can break down below this previous pivot, that means the market will be going up, and I think we could fall fairly quickly out of here and down to 20, which would be really bullish for the market. So that's what I'd like to see. I'll be watching this area on the VIX very closely. If we get a bounce in here, it means the market is rolling over. Not really what we want to see. TNX, the 10-year yield. Now you can see that over the last few days that has been moving up quite strongly, stronger than we'd like to see, and has probably been slowing the rally in the indices. Now, I would really like to see these yields roll over. This is definitely a headwind for equities when yields are rising this quickly. Maybe we come into this previous pivot here, a bit of a minor resistance level, and roll over there. That would be nice to see. So also be keeping a close eye on this during the week. The dollar index, this is another headwind. With the dollar index going up this fast, this is another headwind for equities. But we put in this nice shooting star. Some might call this a gravestone doji, but shooting star, this is a bearish candle. So maybe we're about to see the dollar roll over a little bit here. I'd be fine with the dollar rolling over and maybe coming down and testing the 21-day moving average. So another thing to keep an eye on. All of this, you can see how all of this really sort of interrelates. There's some signs that of potential tailwinds for equities in things like the dollar rolling over and maybe the 10-year yield potentially rolling over. Where to next? Oh yeah, let's take a look at our DCA timing tool. It is still firmly red. Just starting to see some hints of a turn up in the MACD signal down here. So that's good, but this is still probably at least a couple weeks away from turning green. However, let's look at some of the other indices, and we can see that the turn up in the MACD signal line is stronger in the Qs than it was on in the SPY, but still firmly red. And in IWM, the small caps, this is the one that's closest to crossing over and potentially turning green here. So we'll be keeping a close eye on that, getting ready for that. All right, let's move on to our commodities. Start with gold. Gold's looking pretty nasty here. It had, it broke down below some important support. It seems to have found support at this pivot from back here. So we'll keep an eye on that, but you could call this a bear flag right here, which would lead to more downside. When you look at the gold miners themselves, who are often signaling what will happen in gold, this doesn't look great. It looks like a bit of a dead cat bounce and bear flag, and looks like this could roll over. Although that that reversal candle there is pretty good, even though it's red. There is a hammer right there. It had half decent volume, so there's a potential that it could be a bottom here, but I don't know. I don't like it. This was too important a level that it broke. Just a week before last. Silver is pretty much the same thing. This is looking very hands-off. Looks like a bit of a bear flag, messy bear flag, but just too ugly to even think about right now. Thinking about getting in that. I think that if there is a bounce, I mean this is a really weak bounce, right? If this bounce continues, I think it's probably a dead cat bounce, and we're going to see more downside in this. The upside to all of this, because especially with gold. Because gold is usually an asset that people run to when they're afraid of inflation. So with this rolling over like this is a signal that fear trade, that inflation trade, may be coming off, and some of the inflation fear is coming out of the market, and maybe inflation itself is coming out of the market. Maybe that's what this is telling us. The smart money is saying, okay, inflation's over, or going to be over soon. So there's potential for that. That's something we need to think about as well. Copper, probably a dead cat bounce, although this is, again, really nice reversal candle here. Really nice follow-through candle, but it didn't follow through on the third day. So that's a bit of a warning here. Still could. This could have a good day on Monday and come right up and test resistance here, but for right now, this sort of looks like a bit of a dead cat bounce. The overall commodities index, DBC, we've had a nice bounce in here. This bounce is looking better to me than bounces, in some of the individual commodities, especially the metals that we've just looked at. So maybe this is something to watch. We do have to watch for this gap fill that's right here, right now, though. Let me draw that in for you guys. Got that gap right there. So it's come in there and stopped. If this is going to roll over, it's going to do it right now. If we can get into this gap and and start working through that and work above some of these moving averages that are coming down on us, this could be very bullish for commodities overall. Now, unfortunately, if it's bullish for commodities, that's kind of inflationary, so we may not want to see that happen. The agricultural commodities, these have had a bounce as well, looking pretty strong in here. We would expect these to come in and test this 200-day moving average and this declining 21-day moving average. And again, we really don't want to see a giant bounce in commodities. It's interesting, though, that equities are rallying at the same time, because a rally in commodities should be a headwind for equities. So another thing we got to pay attention to. You can see there's a lot of there's a lot of change going on in markets right now, and a lot of stuff at key inflection points. Okay, let's move on to crude oil. And you can see we've had a bounce here. Now, we've bounced right into that uptrend line. Polarity suggests that this should now become resistance. And we've got a bunch of moving averages overhead, so we'll be watching closely to see, is this just a dead cat bounce and we roll over? Or, does this continue higher? We're at an inflection point here as well in crude. If this continues higher, then I think we will see this as a headwind for most equities. Now, when we look at XLE, we see a bit of a different story. Very weak bounce here. Was weak on Friday. Now, this is a very steep downtrend, but it does seem to have acted as some resistance. This looks to me like it's going to roll over again. And if you look at some of we won't look at them now, but if you do look at some of the individual, or a lot of the individual oil companies, they all look kind of weak like this in here. Like they've had this weak bounce and look ready to roll over. If we look at XOP, the oil producers ETF, you can see that bounce. It's kind of weak and then had a red day, looking ready to roll over. And the same goes for the oil services ETF. A bit of a bounce, but a weak Friday, looking like it's going to roll over. XLY, consumer discretionary. This one has had a nice rally here. We've rallied right up into that gap, acting as resistance. We've got that 50-day moving average. We've seen a lot of this, right? But we have the potential, nice potential rounding bottom in this one. Let's see if this can continue on through here. Possibly, a little pullback here. Maybe it pulls back to this former pivot level and then bounces off of that. I'd be totally fine with that. Consumer discretionary looks healthy here. But remember, we've got, if you're playing in this space, we've got the retail number on Friday. And obviously there's a lot of retail companies in the consumer discretionary ETF. Industrials, kind of messy. Really kind of chopping around here. I don't know what to make of this. I just don't want to play in this space right now. But one of the industrial companies that we've been keeping an eye on is Northrop Grumman. It's making, this is a nice little pattern up here. It's pausing just before resistance. Maybe this is getting ready to break out of here. There could be a nice little play in here for people. This one's not for me though. I just don't think it's going to move enough really for me. But if you're very long, if you really like this company, you've got a really long-term outlook on this. This does look like a nice launching pad to much higher prices over the long term. But I haven't done enough due diligence on this company. I don't know enough about the company to want to be in it long term. And it's not really the kind of industry or the kind of company. The aerospace and defense doesn't suit my personality well, being in something like that. Financials. So yeah, like we said earlier, we've got a lot of earnings coming up for financials. So will that be the launching pad higher? We've got this series of higher lows here. It looks like it wants to go higher. It had a pause, nice little consolidation here, nice little pause. Maybe we can launch higher, get up into this gap, and then through the gap. It's really going to depend on earnings coming out, towards the end of the week on all those big banks. Technology. So technology's had a good week. Nice little rally going on here. We've had an initial little trend line. We've pulled away from that trend line. We got through that declining 21-day moving average. That hasn't happened much in the recent past, but we are coming into the gap and the declining 50-day moving average. So it looks bullish, but there's resistance overhead. So we'll have to keep a close eye on that. Communications sector, very similar. Rally wasn't quite as strong, but it's got that resistance overhead, and it seems to be taking a little bit of a pause. If we get into some of the large cap tech companies that we watch, we can see Apple has had a very nice rally. Got right to a minor resistance level on Friday. There's a whole zone of resistance here between where we are now, 148, and around 150. So this could be a fairly strong resistance level. Wouldn't hurt for Apple to just kind of pause in here, go sideways for a few days, and then take off. Let's see, Amazon. Okay, so Amazon is quite interesting. As you know, they've had that split recently. They've made it a lot more affordable for people to get in here. It makes it a lot easier to trade this. We can trade this now directly with stock, right? Rather than having to do like an option, one call or something like that. And you can see there's a little setup here that I like. We've had this, multiple bottoms here, really strong support down below here. We've had this rally up. Now, we really only so far have a one-day consolidation. However, I think if we can break out above this 117 area, we should have a fairly easy time making a move up into around 129, the bottom of this gap. And it's really nicely risk defined. You can play this. So you can play this for this $9 move with $3 of risk. So a nice 3-to-1 risk reward on that. So that's you're looking for breakout above Thursday's high, with your stop being below below Friday's low. Now remember, this is not investment advice. This is for educational purposes only. But that's how you'd set up that trade. And then once you start moving up, you want to move your stop up as quickly as possible, especially in this market. You know, if you've got a winner, you don't really want to let it turn into a loser. And you may want to consider taking some profit off when we come into this level in around here, in around 124 or so. That might be an area of resistance. Could be a good place to take, say, a 30-year trade off. So yeah, that's interesting. That's Amazon, Meta with the messy chart. Let's just get rid of the mess. So you can see, you know, intermediate term downtrend, potential double bottom here. Come up, we're consolidating. There could be the same kind of play here in Meta than there was in Amazon. I'm not a fan of Facebook, so I'm not going to be playing it. But there could be a pretty decent little move out of this if this can break out here. All going to be market dependent, of course, and these are probably all going to go together. All these trades are either going to work together or fail together. But that's something you might want to watch. Netflix, I do like. There's a trade set up here. Now, you know, we've been talking about this range that it's been in, and a nice, you know, nice base, nice bottoming pattern here. And you can see, look how much this is tightened up right here, right under a resistance level. You know, there are a number of resistance levels in this consolidation, but this is a sweet little setup here. I want to expand this out so we can get a closer look at it. Okay. All right, so you can see we would want to enter above Thursday's high with a stop below Thursday's low or Friday's low. And we're looking at a target of around 244 from that. So we're taking, what, $7 of risk to make $54. I really, really like that risk reward. However, if I'm going to play this, I'm probably going to be looking at taking a small piece off, maybe a quarter of their position off around, you know, at around 200 or just below 200, because that's a psychological resistance area, and you've also got this resistance here at around 206. So I want to fairly quickly take a little piece off if I'm going to play this for all the way up to this 244, the bottom of that gap. I'm also going to want to move my stop up fairly quickly as well. But this could be a really interesting play, and it's not a lot of risk for a fairly large potential gain. You could even, you know, if you took a quarter off here when you say just under 200 and held 3/4 of your position coming into here, you could take another quarter off here and try and hang on. See how this consolidates under this resistance level, or maybe it just blasts right through. I don't think it will. I think it's going to pull back a little bit here. Yeah, if you're really liking Netflix and you're liking the way the trade is working, you could think about holding on to half of the position to try and get through, and even add that quarter back in if it does break through. Lots of different ways to play that. If you do end up playing this, let me know, because we can watch it closely in the Discord. Google, this is interesting as well. I don't really like the setup in this yet, but this could set up later in the week. We've had a really big move into resistance. I would expect this to either roll over or consolidate in here for a few days, and ideally, if you're looking for a breakout here, ideally you get a few, a few days of consolidation in there. Tesla, we were looking at this bear flag, and it looks like it's trying to break out the top of the bear flag, and a lot of that is probably news. If we look after hours, actually, it jumped up a whole bunch after hours. Let's take a look at that so we can get that level in there. So after hours, it jumped up and pulled back, and of course it jumped up on the Twitter news with Elon saying he's not going to do the Twitter deal. He's just buying himself a giant lawsuit. Of course, Twitter is going to try and force him to buy the company. And the very best case scenario for Elon on this is he has to pay them $1 billion. But I think Twitter can do a lot better than that even. He's put himself in a really tough spot here. But anyway, Tesla seemed to like the fact that that deal is off. We are now, what are we at? 770. Go back to the daily. So we're at 770 here. Okay, up. Yeah, okay. That's not much, but it did move above that level, right? Where it found resistance. It's moved above there. So yeah, it'd be interesting to see if Tesla can continue higher from here, or if it rolls back over and comes back into this pattern. Then the bear flag pattern is still on, still intact, right? And we know from failed moves come fast moves. And that brings in some ugly for Tesla, because the measurement on that bear flag is in around 350, and I'm sure there aren't many people around who want to see that. Obviously, there's the there are a few Tesla bears out there, but not many. Okay, semiconductors. So semiconductors have had a nice rally, but there's a lot of resistance overhead, because semiconductors have had such a rough time. I think we could have another day or two of up, but I suspect kind of the best case scenario for now, the best case scenario in the short term, is these come up here and consolidate and do a nice little consolidation sideways. If they can do that, then they set up nicely, build some strength to get through all this mess up here. But yeah, there's a lot of overhead for semiconductors. So if you're in that space, be careful. And some of the trades we were looking at that did kind of, did nicely on that. The MU has done nicely, but again, you can see it's right into resistance. You've got that 21-day moving average right there. You've got this gap fill. So best case, let's consolidate sideways for a few days. PI. It's impinge. This one has done quite nicely, but you can see it's having trouble right at that 200-day moving average. But this this bull flag does measure out for a little more upside. Let's get that measurement in here. So if we take from there to there, we just grab that and move that up to the whoops. Come on, there we go. Move that up to the breakout point. We see we do potentially have a little bit more upside on this bull flag, but even if it consolidates in here a little bit under this resistance level, then breaks out, that's perfectly fine. Healthcare. So healthcare, we had talked about this bull flag in healthcare. We talked about that. Actually, we didn't talk about that nice. We talked about this nice reversal candle in the, I think in the ticker talk. This reversal candle within the bull flag. We've now broken out of the bull flag and moved up into the, look at that. It just tagged the 200-day moving average and reversed fairly strongly. That's not what we want to see. I want to look at the intraday on that. That's set on a 30-minute chart. Let's move this to a 5-minute chart. Just have a look and see how that looks intraday. Yeah, see, this is not good. The only thing that's hopeful about this, how strong this reversal was that it moved up just way too fast intraday on Friday. That move was much too fast. It really shouldn't surprise us that this moved down. Disappointing that after it bounced a little bit, it couldn't hold these lows here. It was trying to, and I guess it was just right at the very end of the day. So this needs to redeem itself. This needs to move up, start reclaiming some of this first thing on Monday morning. All right, let's go back to the daily here. If it can't reclaim that first thing on Monday morning, this looks like it's probably going to roll over again. Maybe come down and test this resistance area here. If it can reclaim, then probably spends the rest of the week moving up into this resistance level to maybe get ready to go higher. What's next? Right. One of the trades we were looking at last week was this bull flag in Boston Scientific. And you can see that continued to go sideways, continued to consolidate, and then on Friday tried to break out and then pulled right back in, gave us this gravestone doji. Not looking great for that trade on Boston Scientific. Hopefully nobody bought that breakout. If you did, you kind of got to wonder, you know, are you stopping out just below Friday's low? Or do you stop out? I think, you know, if you can, you know, hold your stop until below these two lows right here. But if you had already determined your risk was Friday's low, then that's where you've got to stay with your stop. But yeah, this looks like either it's going to roll right over, or it needs some more time. If this was to consolidate sideways in say the top third of this consolidation zone, then yeah, you could go for the second chance on that. Biotech. So interestingly, biotech did not roll over on Friday like healthcare did. It closed near its highs, so that's very healthy. No reason to think this won't go higher. You can see we've got a target here in around 95, 96 from this bull flag. You know, looks good, looks healthy. Looks like it's, you know, going to climb its way up there. At least that's what it wants to do right now. We might find some resistance in around 90 on the way there, though. Some of the biotechs we were looking at, NTLA is one, and NTLA has set up for us. If we missed that bull flag, this has set up another entry for us. Or even if we got in on that bull flag, this is a nice little low-risk entry here. So you can see we've set up another bull flag. And we can use Friday's high and Friday's low as an entry and a stop. So this might be very interesting because the target on the original bull flag was in this 76 area. So we can get in at 65, 65 and a half-ish to target 76 with only $3.5 of risk. That's a pretty decent risk reward sitting right there. So this is definitely worth keeping an eye on Monday morning. Fate, similar kind of thing, but I like the NTLA setup better than this one. But we talked about this last week, and we talked about this bull flag. So let me know if you played this, because this is a really nice move. If you caught this breakout here, you know, this has done really well, and it looks like it's going to continue higher. This one may, you know, there is kind of some resistance here. This may pause for another day or so before going higher, though. REITs, meh, not much to see here. Staples, not much to see here, although this does look like it's ready to go higher. I mean, we don't want to see these defensive sectors moving too much, right? That's not where we want to see our strength. It's not where we want to see the setups, and we're not really seeing setups there. Utilities, after that giant burst of volatility, these seem to be consolidating now, so that's good to see. Home builders, these have had a fair bit of volatility lately as well, but we getting a nice little, 2-day, 3-day consolidation here. And I think ready to break out higher. We've got that 50-day moving average just overhead, and we've got gaps and things, but this looks ready to go higher. And some of the home builders have already broken out and are moving higher. One of the ones that has lagged behind a little bit, but still leaving us a nice looking setup, is Toll Brothers. So let's take a closer look at this. Now, I think that we can get in with an entry either above Tuesday's high here or above Friday's high. And then you would put your stop below Friday's low or below the 50-day moving average, maybe even below this little cluster of lows right here in the 21-day moving average. But That seems to be more risk than you need to take. I think Friday's low is plenty. You could even maybe look inside, Friday's candle and see, is there an even tighter stop? And if you look right here, we can see this pivot low right here happened to be the previous day's, Thursday's close. A stop below that is probably good enough. You can tighten things up a little bit. But back to the daily. So yeah, there's your entry or your stop, and you'd want to be targeting in around this 53 to 54 area, maybe even 55. You'll want to watch out of this 51 area, and maybe that's a place you would take a quarter of a third off. Yeah, this looks like a nice little setup and ready to go higher, and it does have the tailwinds of the rest of the sector, making a little bit of a move. So there's a few more other random setups here that we can take a look at. So this one is DocuSign. This has been a massive downtrend. So there is definitely overhead in this. This is still in a downtrend, so we've got to be really careful. However, I think we've got a fairly reasonable target on this one. Let's just expand this out here. So I like this, like everything that we've seen, all these setups, right? You've got a nice little consolidation, giving you a breakout entry, nice tight stop on it, and a reasonable target on this one. Now we could target the top of this gap, but I think a more reasonable target is the bottom of that consolidation right there. So that's in around 81. So your breakout is around 68.50 or so. You could, if you're more conservative, you could wait for this level right here from a couple weeks ago, and that'd be around 71-ish. And then, targeting that 81. That looks like a half decent setup. And like I mentioned before, all these setups really require the market to be moving as well. Palantir is an interesting one. I was a little reluctant on this, but I really like this setup here. Nice, tight 3-day consolidation with a reasonable target. So you can see, let's expand this out here. So entry around 1038, 1040, and targeting about $11.90, $12. With a stop, so risking 50 cents, to go and make $1.50. Not too bad, 3 to 1. And if you really like the way this is working, maybe you just take a piece of your position off here and try and hold the rest for maybe, for this $15 area. But, given the way the market's going, I think it's probably best to be conservative on this and take your profit when it's given. So that was Palantir. Snap. Another one with really nice potential, nice tight risk reward on this, and the potential for a fairly large move considering your risk reward. So we would go in here, above Friday's high with a stop below Friday's low, and looking to fill this gap. And so rather than wait for a complete gap fill, look for places where you might find resistance. Now it could be at that pivot at 21, it could be at these pivots here at just about 22. But again, take some profit off when it's given to you in this market. Zoom is another one I really like. You can see we had that this ascending wedge. It broke out to the downside of that, as we would expect, but it fairly quickly found some support and turned around. Nice big green candle there on, was that Tuesday or last? Let's see, 1, 2, 3, 4. Yeah, that would have been Tuesday. Turned itself around, has come up and has started consolidating up at resistance again. So, resistance is going to be the apex of this wedge. So just extend that out. Look at that, it perfectly came into there, that resistance level there, 125, the apex of this wedge. And, we've had this nice little consolidation now up here for 3 days. So basically, your entry is break out of that consolidation with a stop below Friday's low, or maybe below the low of these two candles right here. And targeting, I think the first target on this has to be about 140. That's still not a bad move for you're risking about $6 to make 16, so that's not bad. But maybe you want to hang on to a piece and for the breakout above 140 and hang on all the way to 175. I think that's a fairly reasonable thing to do if Zoom gets going, and again, if the market is helping it along. So that is it for the setups. Let's go back and see what we've got coming up this week. So if you take any of these breakout trades, let me know in the Discord. We'll follow along on them. We can watch closely, watch them intraday. So let me know. And coming up next week on Thursday, we're going to be doing some options education. I'm calling this a smarter YOLO strategy for earnings season. It's a ratio back spread. But it's a neat, if you're into the YOLOs, if you're into having a little fun once in a while, it may not be the most responsible or investing or trading thing to do, but everybody does like to have a little fun. So we're gonna look for stocks that have really high short interest, that have the potential to take off on an earnings surprise, and we're gonna play that with a methodology that will pay us a couple of bucks if we're wrong, if we're really wrong, about them going much higher, but will pay off really nicely if they do go higher. So neat little strategy. I think you guys will enjoy it if you like that kind of play. So hope to see you all out on Thursday, and then 2 weeks from now, or 2 weeks from Thursday, or a week from from Thursday. Sorry, we'll be doing another ticker talk. That's it for me. Hope you enjoy the rest of your weekend, and we'll see you on the Discord.